Mr. Vimal Agarwal, Chief Financial Officer, Mr. Sumit Kasat, Head Investor Relations. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star and then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Arvind Subramanian, Managing Director and CEO. Thank you, and over to you, sir.
Thank you, Inba. Good morning to everyone and welcome to our Q2FY21 earnings call. Firstly, I'd like to thank all the investors and analysts who are participating in this call. As you would all know, many of our key operating entities from the residential business, like Mahindra Homes and Mahindra Analysts, as well as our IC&IC business like Mahindra World City in Chennai and Jaipur, as well as the Origins, are not consolidated on a line-by-line basis. And therefore, the financials do not fully reflect the organizational throughput. I'll start with a few comments on the context of the economy and the sector, and then talk about our performance over the second quarter. As we are all aware, COVID-19 is still a big drag on the economy. Overall, for the year, the economy is expected to contract by as much as about 10% as per various analysts. And the first quarter for which we have numbers, we know that the GDP contraction was just under 24%. Coming to indicators for the second quarter, credit growth from 3.9% in August 2019 has been only 0.5% in August 20. Personal loan growth, which grew at 13.3% in August 19, grew at only 8.6% in August 20. IIP, we have numbers for July, was at 125.2 in July 20 versus 140.1 July 19. And India's retail inflation measured by the CPI, the Consumer Price Index, grew by 6.69% in August 20 versus 3.39% in August 19. So each of the macro indicators is unfavorable compared to similar periods last year. The real estate sector, as we've all been seeing, and based on statistics that have been data that has been released by the Maharashtra government, Mumbai in particular has seen a very strong rebound, with the number of properties sold growing by as much as 112% in September compared to the previous month. The Maharashtra government's move to cut stamp duty on property registrations for a limited period has certainly provided strong tailwinds, and we are seeing interest from home buyers to conclude their transactions and registrations before December. From a decline of 70 to 80% year-on-year sales for the broader market in Q1, Jefferies estimates that sales would likely be down by 40 to 50% year-on-year in Q2. New launches in Q2 from a sector perspective has been at just under 80%, 79% of pre-COVID levels. And the affordable and mid segments, which is the segments that we operate in from a residential perspective, comprise 72% of new supply. Construction activity is also picking up pace, as much as I think we are tracking to about 65 to 70% of the labor strength from pre-COVID levels. Coming to our business, in Q2 we achieved net sales of 115 crores, about 1.6 lakh square feet. Mid-premium contributed to 80% of that and affordable to 20%. We're very happy to see a broad-based recovery in sales across our entire portfolio. Luminaire has been a bright spot in NCR, where we saw 51 crores of net sales. Finished goods inventory has also been moving well. And the average price realization for the quarter stood at 7,150 per square foot. Collections and handovers has also picked up pace. We've had quarterly collections of 134 crores, which was 86% more than the previous quarter. And we've handed over 60 units, which is more than double of what we handed over in Q1. As I mentioned, construction activity is picking up pace. We are at about 75% of our labor strength from pre-COVID levels, and this is gradually increasing. In the first half, we've had very limited completions, and that reflects in the P&L. During Q2, we completed one phase at our Bloomdale project. In terms of new launches, towards the end of the quarter, in the last week of September, we had launched our second project in Palghar, which is in the affordable housing segment. And we launched 485 units, about 1.8 lakh square feet. We're very happy to share that the response has been tremendous. This entire launch was done digitally with no face-to-face customer meetings. All meetings were done virtually. There were no site visits, no experience center, no show flat. All meetings were done through video calls. And we've received a very good response. These sales will be recognized in Q3 since the launch was done towards the end of September. In the foreseeable future, in the second half of this year, we're expecting to do at least 4 residential launches, 2 in the Mumbai region, 1 in Pune, and 1 in Chennai. Our land pipeline continues to be quite strong. I had in the last call mentioned to you that we are targeting to build up about 2,000 crores worth of sales value in terms of new land deals by the end of this financial year. And I'm happy to share that we are on track to do that. We will be announcing land transactions only when we sign definitive documents. So I expect some of these to be announced by early in the fourth quarter. In the IC and IC segment, we've done sales of 8.1 acres for a total value of about 21 crores, 21.34 crores during the quarter. With that, let me request Vimal to share the financial highlights for the quarter.
Thank you, Arvind. Moving on to the financial performance for Q2FY21, the consolidated total income stood at rupees 37 crores as against 22 crores in Q1FY21. The consolidated EBITDA stood at negative 8 crores versus negative 19 crores in Q1FY21. The consolidated PAT post minority interest was minus 13 crores as against minus 20 crores in Q1FY21. While operational performance has shown considerable improvement, which have been talked about, as you know, the revenue is recognized post completion of project, and in H1 and more specifically Q2, the completion of project was at a lower pace, and therefore that's the impact you are seeing in our financial numbers for Q2. Moving on to debt number, we continue to do well so far as debt and cash position is concerned. Company has about 307 crores of debt on India's consolidated level, while the cash in hand was about 150 crores. On a consolidated basis, the cost of debt stood at 7.35% versus 8.7% in March 20. While on a standalone basis, cost of borrowing in MLDL, which is Mahindra Lifespace, is now at 6.5%, which is the lowest ever we have seen for last many years. We expect the cost of borrowing to further improve in quarter 3 as well as in quarter 4. These are the key numbers, and we can move to the Q&A.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question may press star and one. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Adhidev Chattopadhyay from ICICI Securities. Please go ahead.
Yeah. Good morning, everyone. Thanks for the opportunity. So firstly, I just wanted to think on what is our sort of sales guidance or sales target we are looking to achieve for this year and possibly next year, especially the large launch pipeline and the business development pipeline which you said at the beginning of your speech. Thank you.
Yeah, hi, morning, Adhidev. Look, I think given that the first quarter was extremely difficult for the industry and for us and almost a complete washout, I think we'd be very well served if we get to a similar level of sales as we had last year at the end of the year.
Okay, sure. And so anything for next year, like FY22 means, I said, we have, like you said, 4 launches in second half and whatever land transactions you're expected to announce. So any target you're looking to see for the next year now?
Yeah, we would like to be in 4 digits next year, certainly from a residential sales perspective. But of course, this all depends on how the pandemic plays out. But if I were to look at it from where we are today, we would certainly target a 4-digit sales number next year. Okay.
So just on that business development pipeline, so the transactions, post whatever announcement you said in the early Q4, so by when do you see the earliest possible launch for these projects? When would these get off the ground? You expect them?
Yeah, so I expect at least a couple of those to be launched by the Diwali season next year.
Okay.
So that's what we are gearing up for.
Okay. Fine, sir. That's it from my side. I'll come back in the queue with more questions.
Thanks, Adhidev.
Yeah.
Thank you. Our next question is from the line of Mahavir Mehta, an individual investor. Please go ahead.
Yeah. Good morning, Arvindji.
Good morning, Mahavir ji.
Sir, I would like to ask you a few questions like in residential business, till date, how many MOU we have signed with landowners and what is size of it? How many projects we will launch till March 2021? Second, in IC and IC, how is demand there? And any big land parcel inquiry from buyers?
Yeah. So Mahavir ji, on both your questions. So firstly, on the residential side, we are expecting, as I said, 4 new launches in the second half of this year. 2 in Mumbai, 1 in Pune and 1 in Chennai.
And what about Bangalore one?
The Bangalore one is going to take a little bit longer. There are still some CPs we are working through with the landowners.
Okay.
So it might push out a little bit.
Okay.
And from a land pipeline, as I said, we are on track to do I had given you an indication that we will do 3 to 4 land transactions, bringing on board about 2,000 crores worth of sales potential. So we're on track to do that. And you will see announcements starting early Q4.
Okay. And in IC and IC?
IC and IC, actually the pipeline has been building up very well. There are some very large leads in the pipeline. The challenge we are having there is with international travel being restricted. Most of these transactions, it requires these are MNCs and their teams need to visit the land site to do their physical assessments and before they sign on the dotted line. So there is a very good build-up. I'm expecting once international travel starts, we should have sign-ups happening in quick succession.
Any big land parcel inquiry from buyers?
Yes, there are some very large transactions in the pipeline.
Great.
Fingers crossed, pray for us.
Thank you so much. Great. Thank you so much.
Thank you, Mahavir.
Thank you. Our next question is from the line of Prem Khurana from Anand Rathi. Please go ahead.
Yeah, hi, good morning. Thanks for taking my questions. So just to begin with, we've recently done this digital launch in Palghar. If you could share your thoughts on the same and how was the response, how are people taking this, and is it possible to have the similar kind of launch strategy for some of these new launches that you spoke about? Because, as I see it, in terms of ticket size, Palghar is significantly lower. So the risk that you're taking, as a buyer, is low, wherein people ideally could be ready to commit, but when it comes to lesser launches like Chandivali or Andheri, the ticket size would be altogether different. So possible to have similar kind of launch strategy there, or is it that the strategy would differ from project to project? That's my first question. I'll take the further questions separately.
Yeah, Prem. So thanks for the question. So firstly, Palghar was an experiment with every tribe. We wanted to push ourselves to see whether it would be possible to sell apartments to genuine end users without a face-to-face meeting. And we wanted to use the opportunity to push our capabilities from a technology perspective as well as a sales and marketing perspective. So I'm very happy with what we have achieved, but more importantly, what we have learned through that launch. We've understood how customers engage on the digital platform, how to keep their attention, because in a face-to-face meeting, when a family is sitting with you in a site office, they are okay spending 2 hours in a conversation, but in a online meeting, in a video meeting, one has to run the sales conversation very differently. So there's been tremendous learning. The fact that it has been a successful launch and we've got great response is only the icing on the cake. Going forward, I don't expect that we will do purely digital launches. As I said, this was an experiment we tried to test both the feasibility as well as to push our capability set. Going forward, I expect it'll always be a mix of physical and digital, and that is the way it should be. But now with this experience under our belt, we know how to play that mix much better than we had in the past. You had also alluded to the fact that this may be a low risk opportunity because it's a lower ticket size. I must highlight that for the audience and for the buyers who bought in Palghar, this is a very high ticket size. So the audience we were tapping here, many of them are going for loans. This is the first home they are buying. So for them, that 10 lakhs or 15 lakhs or 20 lakhs is actually a very significant outlay. And they took it with as much seriousness, and that was again very revealing for us as somebody who would buy a 2.5 crore apartment in our mid-premium business would.
Sure. It's a small clarification in this Palghar too. So we've received EOIs, right? But are these EOIs kind of conditional? As to the sense that people would be given a chance to kind of visit the property before they consummate the transaction? Or is it that once they've given you a go ahead and they're fine with the price, they would have to go ahead with the transaction, or is it a conditional EOI wherein they are allowed to visit the site?
No. So we've actually netted a large number of those EOIs already, and as I said, those numbers will be part of our Q3 results. But we've been concurrently netting those EOIs, and there's nothing conditional about them. That scheme closed on 31st of October. So whichever customers chose not to net their bookings, they are being refunded their token amounts in the next 2 weeks.
Sure. And 2 more questions, if I may, please. On Luminare side, we've done seriously good this quarter. What changed there? Suddenly last year we were seeing cancellations. Suddenly we've had a very good quarter. And the single largest contributor this quarter is Luminare. So, were there any concerted efforts essentially in sense that either you've given them some staggered payment plans or reduced prices? What has changed with Luminare this quarter?
Look, Luminare, I have deep conviction, was always a good product. And it was just about how we were taking it to market and the discipline around sales. So the Luminare success story has largely been driven by just putting in place very strong sales disciplines, expanding the distribution, following up with leads, making sure that the rigor is there in the entire conversion process. And that is what has yielded results. The good thing about Luminare is it's not just about the overall number in the quarter, it's also about the consistency in both walk-ins as well as bookings. It's month on month, the story is getting repeated, which gives me a lot of confidence that we're doing the right things there.
Sure. And one last, if I may please, on BD side, business development side, I could share, how's the construct between, you prefer JD over an outright buy, or, the existing pipeline that you spoke about and which you will be able to close by, let's say, Q4 early. How's the construct? We could share qualitative thoughts there.
So we are discussing both outright as well as JD. And in fact, in one of the recent conversations, the conversation flipped from outright to JD because, we were simultaneously keeping both on the table, and the landowner preferred then to switch it to a JD. So we are open to both. And we are seeing, good quality of deals as well as a willingness of landowners to to meet us midway in terms of our ask on both consideration as well as payment terms. Many of those deals we are trying to work it in a manner where approvals will be done by the landowner and significant amount of the payout for the land consideration will happen upon receipt of approvals, which also helps our IRR significantly, as you know.
Sure. And just one last, if I may, with your permission. Our net debt has gone up by almost around 48 odd crore rupees during the quarter, and you said, I think, construction is still not back in entirety. We are still at around 75 odd %. We've had seriously good collection, given the fact that we were facing COVID issues. Why would my debt be up? Is it that we made some initial payments towards some of these land transactions?
No, there's no initial payment towards land transactions in the debt. Those are more just capital reallocation, essentially. So there's no land consideration in that.
Sure. How much was the construction?
What has been from a collections perspective, our collection has more than covered our construction cost as well as our fixed costs for the first half. So From an operating perspective, we are self-sufficient. Collections is funding our operations.
How much was the construction spend during the quarter? I think it was not there in the presentation this time.
About 61 crores.
Sure, sir. Thank you. Thanks a lot for taking my questions, and all the very best.
Thank you. We'll take our next question from the line of Rohit Potti from Marshmallow Capital. Please go ahead.
Thank you for the opportunity. My first question is on the debt side. So it's great to see the cost of debt coming down to such extremely low levels. So just curious to know, for our JVs and so a lot of our entities are in JVs or partnership with other entities. So will the cost of debt be the same for those entities as well, like our affordable housing and our IC and IC businesses?
I'll ask Vimal to answer that.
No, so see, the reason for overall cost or rate of interest coming down is driven by two things. One is what is happening around in terms of macro, and more specifically, so far as our own entity is concerned, because of the robust balance sheet and the cash position, we are getting those advantages. Now, within our entities, what's happening is if you are looking for long-term debt position, the leverage is lesser versus the short-term borrowings which you are doing, which means that if you are, say, borrowing for construction purposes, then the opportunities to borrow at a lower rate is significantly higher versus if you're borrowing, say, for land acquisition. The extension of that really is that if you look at NBFC side, the rate has not seen so much of softening versus, say, the banking side. Within that, what we have experienced is that MLDL, which is the parent company for a lot of these subsidiaries and all, the advantages or the positives are significantly higher versus other entities, largely because in other entities the debt is not so much on the working capital side, it's largely on the long-term side. Is that clear?
Yeah, so it was qualitatively helpful, but could you give us a range of interest rate for, let's say, the entities that we have and we do not consolidate onto our books?
Yeah, see, debt which don't directly or indirectly comes to our book will be closer to maybe 8.5% versus, say, MLDL, where the rate is in the range of 6.5% as we spoke about earlier. And I'm sure you know that so far as overall in the real estate sector is concerned, on a blended basis, we will be lower at least by 350 basis points versus industry averages or more.
Understood. So maximum interest rate that we're paying at any entity that we are part of would be at around 8.5%. Is that right?
Broadly, you're right.
Okay, yeah, that was very helpful. My next question is broadly on our land acquisition strategy. So I've been following the company for some time, and for the last several years, my understanding has been, I have friends who've visited and bought some of your products, and they rave about, the customers are extremely happy with Mahindra brand and quality. And if I see over the last few years, one place where we have sort of lagged is the business development or land acquisition. And previously we've always mentioned our intent to go aggressive there, but the eventuality has not borne out our intent so far. So how are you approaching it differently this time, and what gives you the confidence that this time around we will be able to build a really robust pipeline? And on the land acquisition that we do, could you give more? I mean, you have already given a lot of flavor, but could you give more flavor on what is the turnaround time that you expect for each of the land that you acquire? Do you expect to launch it within a month or 2 months? I think one or two projects in the past you have done that way. So are you extremely focused on not minding paying a little higher, but having a very strong, very quick turnaround for any land parcel you buy?
Yeah, so let me answer the second part first and then the first part. So you're absolutely right. We want to buy land which we can bring to market quickly, because we're not in the land banking business. We're not trying to buy land and hold for a future demand. And that also is guiding what kind of land we are buying, the size of the parcels, the locations, etc. So we want to buy land where if I have the approvals, the market is ready to absorb that inventory tomorrow. So that's a very strong filter that we apply. And therefore, we also structure our transactions in a way where, as I mentioned earlier, a large part of the land consideration is paid closer to approvals and therefore closer to launch. In terms of what is it that we are doing differently and what gives me confidence that we are building in the right direction, I think it's two things. One, the environment itself is quite different in the last 6 months compared to what it was in the last 3 years. There was a lot of froth in the market in the last 3 years, and therefore positions from the landowner side had hardened. They were wanting to extract maximum value. Today, they are, as I said, far more amenable to meeting us halfway and structuring the transaction in a way that makes sense for us as well as them. So that's, I think there's a window of opportunity that the pandemic has created, which for strong, well-funded players like us with low debt bodes very well. Second, internally as well, as I alluded to, we are much sharper now in terms of what we are looking for as well as how we evaluate land than we were maybe a year or two back. We've gone through our own learning curve and therefore are able to move much quicker, assess more rigorously. We are a very IRR-focused business, and that is our main hurdle in land evaluation.
Understood. That was helpful. And a follow-up to this land acquisition strategy once more. So, if I remember correctly, our broad strategy was to focus on our core markets of Bombay, Bangalore, and Pune, and have some continuous exposure in NCR and Chennai. Does that remain, or have we changed our stance given the strong resurgence in luminaire sales?
So it remains the same. And just to clarify, Bombay, Pune, Bangalore will be the markets where we will seek to buy new land for residential. Chennai, a large part of our residential strategy sits in Mahindra City, Chennai, where we have a large amount of land still to be developed for residential. And NCR, we are wanting to wait and watch. We want to complete luminaire well. There is still one more tower to do there, so that launch will come up early next financial year, and then we will take a call.
Understood. That was helpful. And my last question for today. So when I compare Mahindra to all the other real estate developers, I mean, it's interesting to note that probably you're the only builder of scale which is not a promoter-driven entity. So I believe all other entities have a promoter family directing the course of the business. So I just wanted your thoughts on the advantages and possible disadvantages of this situation, or is there anything in that at all?
Look, I don't know. It's hard to put a simplistic frame around advantages and disadvantages. Each has their benefits. A promoter-run company can be a lot more entrepreneurial. One person takes a decision. It's a very intuitive gut feel business call that a promoter can take, which as a professionally managed and board managed company, one has to think of decision making a little bit differently. Whether it's better or worse is very hard to judge. I think broad basing that decision making makes it more sustainable. We're not dependent on one person's brilliance to take the business forward. But just, early in your comment, you mentioned we are one of the few players of scale with professional management. Professional management, yes. Scale, I'm glad you consider us to have scale. I feel we still have some way to go to build scale. I think there's a lot of headroom for growth.
Thank you for your detailed answers, Arvind. I really appreciate it. I'll get back into the queue.
Thanks.
Thank you. Our next question is from the line of Chintan Parekh from HDFC Securities. Please go ahead.
Hi, sir. Hi, Arvind. This is Parikshit here from HDFC. My question is again on the business development side. So earlier, I think we were looking at some outright deals also on the land side, but now we are again thinking of doing mix of, I think, outright and JD. So has the overall land acquisition or BD size increasing for us? I mean, is it going to increase from the levels which we were thinking earlier?
Yes, but it is going to increase, as I said, in a sustainable way. Now, I don't want to go out and buy 5 million square feet of land. While the opportunity is there, the market is, the pipeline exists. We also need to buy land, which we can then, as we spoke about earlier in the conversation, one we can bring to market quickly and we can launch successfully. So it's about keeping both of those, in lockstep. That we buy land. In the past few years, land acquisition has been a bottleneck. We want to make sure we buy land and we can sell and market it quickly as well. So both of those engines have to fire at the same time. So we want to build it in a sustainable way. This year, if we are able to do those 3 or 4 transactions, 2,000 crores worth of gross development value going into next year, I think it sets us up well, and we will grow from there year on year.
Okay, sure. Okay, so the second question was more on the distribution side. So since now we are building up a pipeline on the BD side, so how are we placed in terms of distribution setup, and what are we doing there to market these projects when they come to the launch phase?
No, so thanks for asking that question. In fact, that has been a very significant area of focus for us over the last 6 months. We've really strengthened our distribution. I had mentioned that in the context of the question on Luminaire. But the same applies to Mumbai, Pune, and Chennai as well, where in all of these markets we are investing a lot of time and effort to build out our distribution. So just to share some numbers, in Mumbai, for example, we now have almost 3,000 empaneled channel partners. And in projects like in the launch of Palghar, but also going back almost a year to the launch of Kalyan, what has really driven the success has been the retail distribution, the long tail of channel partners who brought 1 deal, 2 deals, and that to me is a very sustainable platform to build off. In the past, there's been a few large channel partners who've done 50, 70, 100 deals. We can't rely only on that. We also need breadth of distribution. So in Mumbai, we've, as I said, now empaneled 3,000 channel partners. We have a app which we use to engage with them. They are finding that app very useful. We track the usage of that app. In the last month, we had almost 600 active users on that app. And that app is used to both disseminate collateral to them, run schemes. They can submit their brokerage request invoices on that app. So it's an end-to-end engagement platform for our channel partners.
Okay. So now, since you earlier touched upon that the organization is more professionally driven, so the risk and the reward has to also flow into the key employees or the management. So what are the steps you are taking there to boost their morale to go about and keep selling and gain market share in the market? So any plans being worked out on that, either in terms of a ESOP scheme or something?
Yeah. So in the AGM, we had taken an approval to enhance the limits of both the ESOP schemes, 2006 as well as 2012 schemes. And the reason that was done was to create a stronger incentive compensation mechanism with the leadership team to start with, and then the rest of the organization. So that is something we are working on very actively, and we should be in a position to put something in place within this financial year.
So just lastly on the land bank again, you said you will start announcing some of the deal closures earlier in fourth quarter of financial year FY21. So typically, what are the key locations or key regions where you're looking to add this land bank?
The pipeline, as I said, is Mumbai, Pune, Bangalore. That's where we're looking to acquire new land for residential.
And this will be like average ticket size would be like in that 7 to 8,000, 7 to 14,000 kind of realization?
Yes. So I would say if we also include our affordable portfolio from 5,000 to 15,000 PSF.
Okay.
And ticket sizes from roughly 30 lakhs to 2.5 crores.
So largely it will be like lopsided on more on the mid-income luxury side or mid-income to luxury side.
Yes.
Not much on really on the affordable side.
No. So as I said, all the way from 30 lakhs or 25 lakhs to 2.5 crores.
Okay. That's all from my side. Thank you, Arvind, and all the best.
Thank you.
Thank you. Our next question is from the line of Himanshu Upadhyay from PGIM. Please go ahead.
Yeah, hi, good morning. I had a question on, Mumbai is one of the focus areas for us, okay? And in terms of launches, how are you looking at, because the thing is, the stamp duty has been reduced and we are seeing a lot of traction, what we read in newspapers, okay? Till December and then till March, okay? Is there something we can really use that opportunity to do the things and before December, all the launches, or do you think it may take time? And again, when we are seeing this 2,000 crore sales value type of projects, are these majorly, means is there something focused more on Mumbai, or it remains Pune and Bangalore only, because we've not seen much happen for us in MMR in last 2-3 years. And whatever we had, Sakinaka, it is still pending a lot for a very long period of time. So first questions are on these things, especially Mumbai focus.
Yeah, so Mumbai, you're absolutely right. I think the fact that this stamp duty reduction is time bound, that there's a steeper reduction till December and then a lesser reduction till March. We have to, plan our launch calendar accordingly. So we are trying to push for a couple of launches in that window. And honestly, look, between December and March, it's a 1% difference. So as long as we launch in the December to January kind of window, we'll be able to get those registrations done by March. And the good thing is, it's in the interest of the customer to complete their registration so that they can take advantage of that. So it acts as a forcing function for the customer. So we are planning accordingly. You're absolutely right. From a land pipeline perspective, in fact, several of our deals in the pipeline are MMR deals. So you will see a strengthening portfolio within MMR as well.
And again, in Nagpur, that project has been there for a very long period of time, okay? Is there some traction we can see even in Nagpur, Bloomdale, because some amount of reduction in stamp duty is still in Nagpur. So are you saying something can be done and we can get out of those projects at a better rates, faster, something? Or do you think no improvement you are seeing in Nagpur, or will take its own time?
Nagpur has been a kind of a steady shift. We are not seeing a significant uptake. Part of it is also just about the overall market and the absorption in that market. It is kind of flattish, and therefore the opportunity to significantly increase velocity is limited. So that's the challenge with Nagpur, but it is a steady shift. It's clocking month on month at the same run rate, and in the next maybe 12 to 18 months, we hope to sell most of our inventory there.
And when we are talking about this 2,000 crore, will it be majorly mid-premium? Why this question is because, if I see affordable, which has come up in last few years, the ongoing and forthcoming is something like 3 million square feet, and mid-premium is something like 4.64 years, and where we have been for more than 25 years. So what we have seen is affordable you have been able to scale up, but mid-premium has been a pain, okay? So when you are saying it does depend more on mid-premium, huh?
Yeah, so as I said, I think this question came up earlier as well. The pipeline is both affordable and mid-premium. Ticket sizes from about 25 lakhs to 2.5 crores. I think, like you rightly said, there is gaps to fill on the mid-premium side. So the pipeline reflects that. You will see deals happening in that space.
The clarification what I wanted was what happened in affordable that we could get so much of development potential or these things. In mid-premium, it was slower. Means what were the issues? Just to understand, affordable could scale up so well and mid-premium could not. So just some thoughts on yours that affordable we could do better and not on mid-premium. Just to understand the thing.
Yeah, look, I don't know whether it's too early to say better or worse. It's been, a 2-year story, and our business, as you know, is a bit lumpy. So you do one transaction, it suddenly, looks like the weightage is shifted to one part of the portfolio rather than the other. I think going forward, I expect a reasonable balance, about a 50-50 balance between the affordable and the mid-premium segments, both in terms of contribution to sales.
Okay. And I was seeing the Chennai project, the affordable housing. We are giving a 10,000 rupee rental guarantee type of schemes. Okay. Would not if we give guarantee type of things, it will be more investor type of people which will come, and then you can have again lesser people residing in the projects and more rent seekers. How are you looking at such schemes? What you have? And
well, it's called a rental guarantee, but in effect, it is a pricing scheme. And it's just about structuring it in different ways so that the customer sees either their EMI getting offset or some other benefit that they get back. These are just different ways to structure the pricing. I don't think they necessarily attract only investors. We have seen when we've launched this in the past that end users have also been attracted to such products because they see it as max and how does it overall, what's the outgo for me, and both on an overall basis as well as a monthly EMI basis.
Okay. And two last questions. See, if we look at 2015, means one of the good years when we were able to launch 2.5 million square feet type of things. Okay. Can we expect 2022 or means we coming back to those levels, because after that we have been only 0.9, 0.5, 0.9 type of launches. Do we think that in next 2 years we can reach back to those levels which we were doing in 5-6 years back, or you think it will still take further time from here on? And based on the pipeline, what you are saying?
All I'll say is inshallah. I think that's what we are trying to gear ourselves up for. So fingers crossed we should get there.
And one last question. In the AGM speech, I was hearing of the chairman, sir. So there he seemed quite optimistic on the means development or the factory setup or the SEZ type of business what we have. Okay.
Yeah.
But and it seemed very confident. He categorically stated that a lot of business will move from manufacturing from one of the large countries to us, and we are seeing traction. But can you tell something on how is the inquiry level, or let's say if last year we were having so many at a point of time these many inquiries, and currently we would have these many inquiries, just to understand, because though we are seeing optimism, and I think in Q1 also and even Q4 we had some amount of optimism, but in numbers we've been not able to see. Okay, so just qualitative aspects, if you can tell us some idea or just to elaborate on that, because I think in AGM speech out of 15-20 minutes, half was on that discussion, or it seemed quite optimistic. So just to take your thoughts on that.
No, I think, look, one of the reasons we are upbeat about that business is because there are favorable global geopolitical trends that, and we've been reading about many MNCs wanting to shift their manufacturing or at least expand their manufacturing beyond the traditional markets like China. And that is reflecting in the pipeline buildup that we have. We are seeing large inquiries, as I mentioned, from MNCs who are currently manufacturing in China who want to either set up a second facility or other things from a country like India. Now, there are 2 or 3 factors to keep in mind with this business. One, it is a long cycle business. An inquiry to a conversion takes anywhere from 6 to 12 months because these are very major decisions being taken by these companies about where to set up a factory. It's a very sticky decision. It's not taken lightly. Second, as I said, more tactically and near term, because international travel is restricted, while inquiries and evaluation has progressed, commercial negotiations have progressed, the actual signing is still held up because these clients expectedly want to visit the site before they sign on the dotted line. And the third is, the India story has to be viewed. While sitting in India, we are very optimistic and upbeat about the Indian economy and what it can do. These kind of global manufacturing location choices, India is always up against other options like Thailand and Vietnam, even if you keep China out of the picture, which have also been very competitive over the last few years. We've seen a lot of manufacturing investment moving to those countries. So while India is typically always among the top three choices, it is never the standout first choice. So we have to sell India, we have to then sell Mahindra World City or Origins within India to these clients.
Okay. Thank you then. Yeah.
Thank you. Our next question is from the line of Biplab D from Antique Stock Broking. Please go ahead.
Good morning, sir. Sir, just two questions. One is that we have been hearing commentary and we have been seeing data from the developers, real estate developers. The residential sector has been witnessing recovery across market and surprisingly in all price points. And so, in case of Mahindra Lifespace, can you give some insights? What trends are you seeing? Is it more skewed towards ready to move in, or is it skewed to some ticket size? I'm just trying to understand. Also, what is the reason of this recovery? I mean, it's good for us. Just trying to understand, is it because of the lower interest cost? 7% is very low, or is it a combination of a myriad of factors, like in Mumbai, maybe stamp duty cut, low interest cost, developer giving some kind of relaxation in payment, some discount, etc., etc. So just trying to understand this recovery and the sudden this set of good numbers everybody is reporting.
Yeah. Look, I think there's actually four factors contributing to the very sharp rebound in sales. The first is because Q1 was completely shut down, there is certainly a deferral in demand from Q1 into Q2. So people who were intending to transact in Q1 were not able to, are now buying in Q2. The second is there is clearly a set of customers, and our research is bearing this out, that because of the lockdown experience, being locked up in their homes with their families for 8 months at a stretch, not being able to move out at all, they have realized that they need to move to a better quality home, either larger or with better amenities, etc. So it has brought more people into these maybe customers who have been loosely dabbling with the idea of buying a home but have not committed to buying a home, but because of the lockdown experience, they're now committed to buying a home and have started transacting. The third, as you rightly said, is the interest rate cuts and home loans becoming far more affordable, driving overall affordability in the market. And the fourth is local factors like the stamp duty cut in Maharashtra, which has certainly provided a strong impetus to close transactions, because as I mentioned earlier, there's a time-bound nature to that. If it was an open-ended stamp duty cut, the effect may have been different. The fact that it is a 3% cut up till December and then a 2% up till March actually provides some kind of a forcing function or an urgency to close the transaction. So I think all these four factors have contributed to the sharp rebound in sales, and this is, as you rightly pointed out, and our portfolio bears this out, it is across all price segments. We don't play in the super luxury, 5 crore plus kind of ticket size, but at least the segments we play in, all the way from the 10 lakh segment in Palghar to the 4 crore product in Luminaire, we've seen a very, very healthy uptake in walk-ins and transactions across the portfolio.
Thank you, sir. Sir, next question is on your strategy, Mahindra Lifespace strategy. So see, this is what I understand. Correct me if I'm wrong. The market, residential market over the past 2-3 years has been under consolidation. Means that reputed developers like you, Godrej, everyone, they are selling, they are gaining market share, whereas tier 2, tier 1 developers are not unable to sell, at the same time not able to get funding. So post-COVID, this consolidation seems to be gathering pace and expected to gather further pace. So in such a scenario, so you see, if you see reputed developers, input corporates like Godrej, Birla Estate, Adani, and your are getting into aggressively into real estate development and into new markets. Some players are like some players who have been doing business in Bangalore, he is entering Mumbai, NCR, similarly, so on and so forth. So in such scenario, from the point of deal sourcing, sir, if I have a plot of land parcel, I'll go to developers, Godrej, Birla, Mahindra, and all. So in terms of deal sourcing as well as distribution as well as selling, how is Mahindra placed? I mean, how does Mahindra Lifespace intend to distinguish itself? Because so in which category you want to grow? What is your strategy? I initially 5-10 minutes I missed your this thing presentation. That's why I'm asking this question, sir.
Sure.
Where do I see Mahindra in the next 3 years? What is the strategy?
No, so you're absolutely right. The Mahindra brand and the credibility that we bring as a group to this business is a huge differentiator in a market where customers have burnt their fingers dealing with fly-by-night developers who have not delivered to their promises, either from a timeline perspective or a quality perspective. So, the single biggest proof point of this is the success we had with the digital launch in Palghar, the zero-touch launch. If it were not a Mahindra offering, I don't think we would have seen such a good response. The fact that customers were willing to trust us and make bookings, not just inquiries, but actual bookings with us, without having visited any site, without seeing a show flat, without meeting a salesperson face to face, is a strong testament to the fact that the Mahindra brand matters. This also matters not just from the sales perspective, but also from a land deals perspective. Because again, I am seeing landowners who earlier would shop around their land with multiple developers, go for the highest price that they get, now starting to understand that there is a certain risk associated with the transaction. And I would rather deal with somebody like a Mahindra where once the deal is committed, it will happen. And there's a certain surety that, the transaction will get closed, the cash flows will get realized for the landowner. So on both these sides, on the supply side as well as the demand side, there is tremendous value that the Mahindra brand brings, and that in more generally, like you said, the organized players will stand to gain through this shakeout.
Sir, this is my final question. This is in continuation to my previous question. So, sir, in the next 3 years, where do you want to be in terms of million square feet per year, say 4 million, 5 million, or in terms of booking pre-sales, in terms of crores? How much pre-sales do you want to be? Where do you see yourself in the next, say, 3 years, sir?
In the next 3 to 4 years, I would like to, business should be at 2,500 crores of pre-sales per year. Very clearly, that's the goal we set ourselves.
Okay. Thank you, sir. That's all from me. Thank you.
Thank you. Our next question is from the line of Manan Patel from Equirus PMS. Please go ahead.
Hello. Can you hear me, sir?
Yes.
Thank you for the opportunity. So my first question.
Sorry to interrupt, sir. If you're in a hands-free mode, please switch it to a handset.
Hello. Can you hear me now better?
Yeah, I can hear you.
Okay. So, sir, my first question is, regarding our capital. So, as you said, there are land deals in the pipeline, and the cost of debt we enjoy is like among the best in the industry. So, do you see this debt rates or interest rates available at much higher amounts of debt? And will you be inclined to raise debt at these levels if and when you get these land deals done?
Yeah. So Manan, fundamentally, I think the priority for us to get a robust land pipeline and then go ahead with the transaction. So far as funding, borrowing, or availability of taking any loan is concerned, that's I believe is not a challenge as such. And we have tied up lines with significant sums which we can deploy as and when required.
And these rates are applicable to the additional debt that you may raise in the future as well?
I'm not referring to any specific rate. What I can tell you is the lines which we have tied up right now are the most competitive rates which are available across industry, across markets, across players in real estate.
Understood. And as the land deals get done, do we see the debt amount going up substantially?
What's your belief, Manan?
So I understand that you might not be inclined to raise equity, but I think debt might be a good option for you.
Manan, the way it really operates is that you will always optimize between the money you have in your bank, borrowings which you want to do from financial institutions, and also the risk appetite you have, in the sense that do you want to do joint ventures or do you want to go solo? So it's combination of all these three. Really depends on which transaction are we talking, which micro market we are talking about, and based on that we decide on such acquisitions and investments.
Yeah, and look, I mean, just overall guidance on that would be we will not go berserk with it. We are one of our strengths so far has been that we've been a low debt company, strong balance sheet. We will protect that.
Understood. Sir, my next question is on the strategy of the business as whole. So there are two businesses, largely IC and the residential. So they have completely different dynamics. So are there any plans or thought process of separating these two business lines in medium or short term?
So we keep evaluating that, and at the right stage we will do that. Right now, I don't think either of those businesses is large enough to warrant that. The complementarity of the two businesses, one being B2B, one being B2C, does add some advantage to our portfolio as a consolidated business. But when they achieve scale, we will try and unlock value because, as you rightly said, the dynamics of these two businesses are very different. The capabilities are different. Investor appetite will be different. So we will do that at the right stage.
Understood. And sir, my last question is, in your presentation, you have mentioned that real estate is one of the key sectors of the group. But from the numbers or scale perspective, the other group entities are way larger than the real estate entity. So when you make that statement, so what are your parameters that you are looking at, and does that consider your aspirations to reach a much higher scale in the future?
Yes, certainly. It is about our aspirations and also the group's expectation from us. They do see this business having the potential to scale. They've given us that reassuring support all along, but even more so in recent times. And particularly, thinking of it contextually, there is a very clear understanding that the time has come now. This is a window of opportunity coming out of the COVID situation where, like many before you have commented and questioned, that there will be a shakeout in the industry, there will be consolidation of market shares, and players like us should make our moves at this time.
Understood, sir. Thanks a lot, and wish you all the best.
Thank you very much.
Thank you.
Thank you. Ladies and gentlemen, we would like to inform you that we are extending the call for 10 minutes to accommodate a few more questions from the participants in the queue. We'll take a next question from the line of Rohit Poti from Marshmallow Capital. Please go ahead.
Thank you for the opportunity. I have just one more question. So you have detailed very much on how you intend to allocate capital to the residential business. Is there any intent to do more deals on the IC and IC business as well? Because as one of the previous participants mentioned, the chairman did mention a lot about that sector and about the warehousing opportunities in that sector. So do you see us doing more deals in more locations in that segment, or for now we focus on residential?
From a capital allocation perspective, the focus will be residential. I think on IC there are opportunities within our portfolio itself to monetize existing assets, and there is a pipeline there. So I don't expect significant capital deployment in the IC and IC business over the next couple of years at least.
Okay, perfect. That's it. Thank you.
Thank you. We'll take our next question from the line of Vipul Sangvi from Systematic Shares. Please go ahead.
Yeah, hi. Good afternoon, gentlemen. My question is in follow-up to the four factors that you highlighted, which is, driving the recovery. So I just wanted to ask that do you see pricing correction also kind of triggering the amount of increased interest that we have seen? Or have you seen any material pricing correction in different micro markets that you operate? That's my first question.
It's interesting, and my answer will be counterintuitive. In some of our most successful projects, so if I were to take Palghar, for example, as well as Kalyan, which was launched last year, we've actually increased prices by 8 to 10% in this period and are still seeing good velocity. So pricing is a very local, project-specific decision. I know many journalists in particular, not analysts like yourselves who are investors who are deep into the business, but the casual commentators will talk about across the board price cuts. I don't think that's the way this industry operates. Even within the same micro market, you'll find assets trading at very different realizations. It depends on the capital locked in and what the priorities of that developer are at that point of time. In our portfolio, we are fortunate that we've had some strong launches, which has allowed us to move prices up. And that will continue to be our strategy going forward, that we will offer value at the time of the launch and then move prices up quickly after that.
Sure, that helps. Thank you. And my second question is, agreed that there is, increased momentum due to several factors, as you highlighted, be it, in general, plus some local factors. Do you see equal amount of aggression from the banks and, mortgage funding, NBFCs to take up this increased business? Or do you see equal amount of aggression from their side as well?
So you're referring to how are banks and NBFCs looking at real estate industry? That's your question?
No, yeah, I'm wanting to understand that are they willing to participate equally aggressively to pick up the increased volume that we are seeing in, last some time?
See, again, so far as Mahindra Lifespace is concerned, we are seeing very strong support from the financial institutions, and there is absolutely no sort of reduction in intensity. However, at an overall industry level, whatever feelers we are getting, I think the financing is not easy per se, in the sense that the NBFCs and banks are being cautious and and are in a way reevaluating their strategy, is what I'll say. So it will be, I will not say very, very optimistic scenario right now. They will be cautious in their next steps.
Yeah, I would think, if I were to add to what Vimal said, 6 months later, if we were to analyze has capital allocation from the banking sector increased towards real estate as a sector, I don't think that will happen. If anything, it will be flat or declining because of various issues around their loan portfolios. But within that, and I'm a strong believer in this, whenever there's a challenge at a sectorial level, the stronger players will get disproportionate advantage, because within that, the redistribution of funding will happen towards the stronger players.
Fair point. That answers my question. Thank you so much, gentlemen.
Thank you. Our next question is from the line of VP Rajesh from Banyan Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. I have two questions. First one, on the residential side, you referenced your IRR as one of the key criteria on whether you go for land parcels or not. So if you can just share, what kind of IRR you target in these projects, and does it differ from the affordable housing projects, let's say, or mid-market projects?
No, so we have the same hurdles across affordable housing and mid-premium. I'd say our IRR hurdle at a project IRR level unlevered is in the high teens. Any deal below that we don't look at. And therefore equity IRRs will be significantly higher than that.
I see. And then secondly, on your industrial parks, given the announcements from the government regarding PLI, are you seeing increase in inquiry across the industry segments? Like, for example, we are seeing folks like Dixon expanding on the electronic side, textile companies also looking at it, and obviously pharma companies looking at that PLI scheme. So I'm just curious if you are seeing demand in your industrial estates because of these.
We are, and there are some industries that have suddenly almost mushroomed in terms of demand. Renewable energy is one where the dependency on, for example, solar panel manufacturing in China dominated the world's global supply chains. So many of those players are looking to set up manufacturing in India now, both because India is a large buyer with the amount of solar energy that is coming up, but also it serves as a competitive base for manufacturing for exports.
So therefore, the prognosis on the industrial side is pretty robust. Is that the fair way to understand your comments, given all these new industries coming up to look for manufacturing sites?
I would be more measured in my prognosis right now, just simply because there's a very high dependency on economic policy and India competitiveness as much as it is on individual parks competitiveness. So we are very coupled with how the India policy framework evolves and what happens in terms of incentives for local manufacturing, import substitution, etc.
Got it. Thank you so much.
Thank you. Ladies and gentlemen, that was the last question. I would now like to hand over the call to Mr. Arvind Subramanian, Managing Director and CEO, for closing comments.
Thank you, Inba. So thank you once again, everyone. As we had discussed, Q2 has clearly, the industry seems to have turned the corner from a abysmal Q1, and the company has also done very well in the second quarter on a sequential basis. Trends going into the third quarter are also strong, but we will have to keep watching this space. It is very hard to think too far ahead in the kind of environment we are now operating in, and we will have to keep navigating and deftly maneuvering as trends unfold in the market. Construction activity as well as footfalls have increased across the portfolio, and we're working towards some impactful residential launches in the second half of the year. And on the BD side, which was many questions on that, we continue to be focused on that target of getting to 3 or 4 land deals contributing to 2,000 crores of gross development value by the end of this fiscal. And just picking up on the last question on the industrial side, again, strong build-up in pipeline. We'll have to keep pushing and with some luck, once international travel opens up, we should see some signings in that space as well. So thank you again.
Thank you, members of the management. Ladies and gentlemen, on behalf of Mahindra Lifespace Developers Limited, that concludes